Welcome to the Metals 100 coverage for the PDAC 2024 in Toronto, Canada. We have Jeffrey Christian from CPM Group here with us today. How are you doing, Jeffrey?
Very good, very good.
You're pretty much like a PDAC veteran now. Like, how many years have you been in the show?
I think the first time I came was probably 1985 or 86. And, we have, CPM Group has a silver reception every year now for the last 20 years. So for the last 20 plus years, I've been here.
Oh, okay, interesting. And 2024 is a pretty interesting year for election. We'll talk about election later on, but the overall market sentiments is a bit tricky now. So we have the inflation still going strong and the interest rate. People still worry more about the interest rate more than the inflation. So and then people talking about more saying that we're going into a recession this year, possible. So what's the sentiment so far, the market affecting people?
Well, our view is that inflation is still high, but it is coming down, and it's coming down slowly. There are some cyclical inflationary pressures that are dissipating, but there are some secular long-term things that are keeping the prices high, especially in services. And right now, it looks like inflation has come down faster than it has been because of a sharp drop in oil and natural gas prices. If you look at other things, the prices are still rising at a relatively strong pace. So that's that. Interest rates, we don't expect the interest rates to be increased, but we have been saying for some time that we thought that the interest rate, when they decline, would decline later and slower than a lot of gold bulls have been saying. And people have to understand, the Fed won't lower interest rates just for fun. The Fed will only lower interest rates when the economy is looking weak. So don't hope for lower interest rates, because that suggests that the Fed is saying we've got economic problems. And that goes into the whole recession issue. Our expectation is we will see a recession, possibly starting in the second half of this year, maybe not until 2025, but we do see recessionary trends emerging across not only the U.S. economy, but on a global basis. So we are expecting a recession, not as severe of a recession as we thought we would likely see 2 years ago. 2 years ago, we were projecting a recession in 24, 25. And we were projecting a severe recession. Now we're projecting a recession, but less severe. But we could be wrong, because the fourth factor, which people haven't really factored in, I don't think, is politics. Politics around the world, international politics and domestic politics. And those things, I think, are going to, complicate the economy, complicate interest rate policies and currency policies, and also cause a lot of investors to say, I should have more of my wealth in gold and silver.
So talking about politics, obviously this year is a big year for election among many countries, especially in U.S. market. So how would that election comes, you talk about the possibly recession around that time or later, affecting the commodity market?
Well, I think the politics will affect the commodity markets in that with gold and silver, the concerns about the political trends in the U.S., in Canada, in Europe, in other parts of the world. I think the concerns about the movement away from democratic, open capitalism to nationalism and tribalism and nativism, I think that will cause investors to buy more gold and silver. I also think that it will cause investors to be more cautious about economic activity, helping to contribute that roll into a recession, and also reducing demand for industrial metals like the base metals and specialty metals because of consumers pulling back on spending and buying, and corporations pulling back on capital investments and manufacturing.
So let's talk a bit about the precious metals. So last year, gold do really well. A lot of central banks actually buying some gold to store. So what do you think of 2024? Would that trend continue?
Well, the central bank issue, I'm sorry, it's a little bit complicated. Last year, you saw about 12 million ounces of gold bought by central banks on a net basis. There were about 4 million ounces sold by three central banks in particular, and I'll come back to them. But on the gross side, you saw about 16 million ounces of purchases. Half of that, more than 7 million ounces, was from the People's Bank of China. And that was gold that had been built up in the Chinese market from people selling in 2022. And over the course of 2023, the People's Bank of China bought 7 million ounces of that. They bought another 2 million ounces in November and December of 2012. So they bought about 9 million ounces of this 10 million ounce overhang. That's probably not going to continue this year. We think the People's Bank will buy gold, but it may be on the order of 3 million ounces or 4 million ounces, not 7. So we're seeing less central bank gold. And I should point out that it was a total of 20 central banks out of like 180 that bought gold last year. So yeah, there were an increased number. Well, it was 21 banks bought gold in 2022. More central banks are buying gold, but it's still a small portion of the central banking community. And then on the sales side, Turkey, Uzbekistan, and Kazakhstan sold gold in the first 4 months of last year because they needed foreign exchange. That's not going to occur this year. So we're looking at maybe 2 million ounces of gross sales, maybe 12 million ounces or 14 million ounces of gross purchases, 10 to 12 million ounces of net purchases by central banks.
Okay. So let's just also talk about silver. So gold is doing well. When do you think silver will be able to catch up to the gold bull run?
I think gold will continue to outperform silver. Gold's more universally seen as an inflation hedge, currency hedge, safe haven, portfolio diversifier. So, if you look at last year, yeah, there was a little bit less investor demand for gold, but not a lot less. If you look at silver, there was a lot less investment demand for silver. Fewer investors were buying it, more investors were selling it. There's a lot of investor disenchantment with silver because there are people who believed all these conspiracy theories in 2022, and they bought silver at $28, $30, $33 an ounce, thinking it was going to 50 or 700. And now it's up to 24 today. So you've got a lot of disenchanted investors who said, I just don't want to talk about silver because I believed all these lies. They were lies. People knew they were lying. I believe the lies. I bought high. I'm selling low, and I don't want to have anything to do with silver.
That's an interesting story there. So last time I talked to you, that was about 2 years ago. Here we talk about the geopolitical factors affecting the market. It seems to be more so than before. Do you think that continue to worsen? So we're sort of surrounded by all these geopolitical tensions around the world.
Yes, I do see it worsening. And that's one of the major factors that we put in to being bullish on gold and silver and expecting investors to buy it. We think that the political environment in the United States and in many other countries around the world and on an international basis, we think that political factors are going to be a major driver for investors saying, I really think I should have more of my wealth in gold and silver.
So any sort of advice for a commodity investor for this year?
Well, I do think you should be long. I don't think you should be discouraged. I don't think you should buy high and sell low. And our main advice to investors over the years has been, you should have a insurance policy, a portion of your wealth, which is a long-term, semi-permanent gold and silver physical metal. And then you should have additional metal that is more of an investment with a 1 to 3 year time horizon. And you can include mining shares there and ETFs. And then you should have a shorter term investment portfolio, which might have physical metal, but it's more likely going to have mining shares, ETFs, options, and futures in it. And I think that diversifying your precious metals portfolio across time, I think that's one of the things that a lot of investors don't get.
Indeed. Quite a good advice there. But thank you for your time and sharing your insights with us today, Jeffrey.
Well, thank you for giving me the time to share my insights.
Thank you, Jeffrey.